This morning, the Commonwealth Bank's share price tumbles after its profit margins get squeezed. That's our main story. Plus, wages across the country rise, but not by enough to trigger fears of rate rises. Afterpay founders plead the case for its $39 billion sale. And how much will your super fund return this year? It's Thursday, the 18th of November, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
And don't forget, following this morning's show, stay listening for Sean's chat to tech entrepreneur and CEO of Splash, Stephen Phillips. It's possibly the best explanation of the metaverse that you'll ever hear. But first, Sean, as I mentioned, the Commonwealth Bank yesterday said it made $2.2 billion in profit during the September quarter, but its share price fell more than 8%. What's going on?
Investors weren't impressed, Michael, with Commonwealth Bank's result. Notwithstanding, it was 20% higher than a year ago, but it was 9% below the average of the March and June quarters. Essentially, the profit margins of the country's largest bank are being squeezed and investors dump the stock. It was the worst day for Commonwealth Bank since the height of the pandemic, and the bank lost about $15 billion worth of value yesterday. Now, it gets a bit technical, but stick with me. A bank's margin relies heavily on the difference between the interest rate it pays out on deposits and the rate it charges for home and business loans. Fierce competition in the home lending sector particularly, and a big switch to fixed rate loans, which have a mortgage rate lower than the standard variable rate, hit the Commonwealth Bank's profit margins. You think about it, in the home lending market, ANZ and Westpac at the moment are both fighting really hard to regain lost ground. It's fair to say shopping around will definitely get borrowers a better deal, but that's hurting the Commonwealth Bank. Now, the bank boss, Matt Comyn, said in its core businesses, it was outperforming industry averages, its credit quality was sound, and it had a strong balance sheet. But investors don't like seeing profit margins being squeezed, and after dropping 6% in early trading, Commonwealth Bank shares kept falling, ending the day down 8.1%.
It can't be good when the biggest company on the bourse has such a shocking day. So how did markets perform overall?
Well, the S&P ASX 200 finished down 0.7% to 7,370 points, while the Commonwealth Bank tumbled. The other major banks were dragged down as well. ANZ closed down 2%, Westpac ended 1.7% lower, and National Australia Bank finished down 1.1%. The big miners also lost ground, with Fortescue Metals falling by nearly 2%. BHP was off 1.5%, while Rio was down 1%. Gold miner Newcrest, that fell back as well. That was down 2% as the price of the precious metal fell back. When you have the big banks and the big miners falling, as you suggested, Michael, it's very difficult to have a good day on the market. But if you take them out of the market, take out the big banks and the big miners, it was actually a pretty decent day yesterday, led by the tech stocks and utility companies. For example, WiseTech Global rose more than 3%, Afterpay jumped 2%, Xero was up nearly 1.5%, and REA Group and Telstra both rose by 1%. In foreign exchange markets, the Aussie dollar dropped back as low as 72.6 US cents yesterday, following the release of wages data, which I'll tell you about in a moment, Michael.
I cannot believe that you are teasing me with wages data, Sean. But I'll bite. First, what's happened in overseas markets?
Wall Street was lower overnight, with fears about inflation outweighing upbeat earnings reports. European shares were broadly unchanged, hovering around all-time highs. In London, the FTSE was down 0.5% after figures showed that annual inflation in the United Kingdom jumped to 4.2% in October. It's the highest level in 10 years. There were also inflation figures out in Canada. Price rises in that economy hit an 18-year high last month. And finally, Michael, oil fell for a second day in a row. Brent crude is trading around $80 a barrel.
We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning, and you've promised me this one. Let's talk about wages growth. They're pretty critical to the trajectory of interest rates over the next couple of years, and they've come in fairly benign.
Yes, they have. Wages were up 0.6% during the September quarter, from 0.4% in the June quarter, according to the Australian Bureau of Statistics. The annual rate rose 2.2%. Now, why do we care so much about wages? Because, as Reserve Bank Governor Philip Lowe said on Tuesday, the main reason the central bank thinks it won't need to lift the official cash rate until 2024, but market economists think it will need to lift interest rates next year or 2023, is wages. The Reserve Bank wants to see sustainable wages growth of 3 to 4%. Australia hasn't had that for years. Sustainable wage growth feeds through to sustained higher prices, and that's when the central bank will use monetary policy to take the steam out of the market. Clearly, from the Bureau of Statistics numbers yesterday, there isn't a lot of heat in wages, or at least there wasn't during the September quarter. Of course, that was during lockdowns, so maybe the result is a bit stronger than it looks, but I'm not so sure.
All right, turning to COVID news now, and a pretty worrying story out of the Northern Territory. 6 new COVID cases among Indigenous Australians there yesterday.
Yes, including a 3-week-old baby and a 13-year-old girl. Police and authorities are particularly worried about communities in and around Katherine. They're working hard to try and contain the latest outbreak of the Delta variant, which has affected 15 people in total now. Yesterday, Federal Health Minister Greg Hunt signed a new Biosecurity Act determination to stop people entering or exiting Robinson River and surrounding homelands. Certainly a concern. Now, away from the Territory, Michael, New South Wales recorded 231 cases yesterday and no deaths. The state has recorded a total of 558 deaths since the Delta outbreak started back in June. More than 91% of New South Wales' population is now vaccinated. There were 996 new cases in Victoria and 9 deaths. It has a vaccination rate of 87%, and the ACT's full vaccination rate is now at an incredible 96.6%. Having said that, there were 6 new cases in the Territory yesterday.
Okay, now I mentioned this one at the top of the show. The management of Afterpay made their final pitches to shareholders yesterday. This is in favour of the $39 billion bid from US payments giant Square. How did it go?
Well, it was certainly heartfelt, and shareholders will decide on December 6th when they get to cast a vote on the deal. Chair Alana Rubin and co-CEOs Anthony Eisen and Nick Molnar told the group's annual general meeting yesterday that the deal will make Afterpay more influential on the global stage. No kidding. It would help deepen the relationship between merchants and customers and grow both organisations, they said. Undoubtedly, the deal is about growing in North America and data. US consumer spending using Buy Now, Pay Later is up 230% since the start of last year. In the fashion category, it now accounts for 6.5% of all US e-commerce spending, according to Afterpay. That's a massive number. Afterpay's referral business, it sends about 1 million referrals to global merchants every day, is one of the key reasons why Square wants to buy the business. Yesterday, Afterpay said it had created $8.2 billion in new revenue for retailers this year via the referral system, and it's just launched in-app advertising, which diversifies its revenue streams.
It's an incredible success story, and it's definitely worth going back and having a listen to the time Anthony Eisen spoke to you on Fear and Greed. How big, Sean, will the Buy Now, Pay Later sector get?
Well, it's certainly here to stay, but regulators are definitely taking more of an interest in the sector, whether that be around excessive debt levels or burning merchants from introducing surcharges. And there's a growing number of competitors in the space, from PayPal to the Commonwealth Bank to lots and lots of smaller players. I think, Michael, there's still plenty of growth left in the system, but I really do doubt if it will ever replace debit cards or get to that type of size.
Okay. Now, keeping with the financial theme, most super funds look like they'll provide pretty decent returns for 2021.
They do. The most recent data from Chant West, which is a research house, shows that the median growth fund, which has 60 to 80% of funds in higher risk assets such as equities, has delivered a return of a touch over 11% so far this year. It puts growth funds in good shape to end the year strongly. Now, since introduction of compulsory superannuation back in 1992, the median growth fund has delivered average annual returns of 8.2%. So, at a touch over 11% so far, this year definitely looks better than average. If you're in a balanced fund, which of course has a much lower allocation of riskier assets such as equities and they're considered safer, balanced funds have delivered returns of 8.4% so far in 2021. That's well and truly above the long-term average. So it looks like 2021 will be a really good year for superannuation members.
Now, Sean, we haven't mentioned this name for a few years now, but former federal Labor MP Craig Thomson has been charged over his alleged involvement in a multi-million-dollar migration fraud.
He was arrested yesterday at his home on the central coast of New South Wales and charged with 30 fraud-related offences. He'll face court today. Police allege Mr Thompson was the primary facilitator of a multi-million-dollar migration fraud. They claim Mr Thompson helped facilitate more than 130 fraudulent visa applications, making more than $2 million in the process. It follows a whole-of-government investigation involving the Australian Federal Police, the Tax Office, the Home Affairs Department and Border Force. Now remember, Mr Thompson was the member for Dobell until 2013 when he left Parliament after a series of controversies related to his misuse of union funds before he entered politics, that was. The charges he's facing carry a maximum penalty of 10 years jail.
Okay, Sean, what's making headlines in today's news media?
The Financial Review is reporting that National Australia Bank will sell its $10 million Australian art collection and use the proceeds to help communities prepare for natural disasters in the face of climate change. There's around 2,500 artworks going on the block. And Associated Press is reporting that Europe is the only region in the world with a rising number of COVID deaths, according to the World Health Organization. The highest number of new cases are in Russia, Germany and Britain. Globally, there were 3.3 million new infections last week, of which 2.1 million came from Europe.
Running through some of the other stories around today, the A2 Milk Company chair, David Hearn, got a little bit of heat from shareholders at the company's AGM yesterday over executive bonuses. Now remember, A2 has had a shocker in the last financial year, 4 profit downgrades and a major write-down in inventory as the Daegu channel to the Chinese market effectively closed due to COVID. The company's share price is down 56% over the last year. Mr. Hearn called it challenging market conditions, but the company needed to retain key staff who delivered on strategic objectives, hence the bonuses.
Maybe. Nufarm reported strong full-year results with revenue up 10% and pre-tax profits up 50%. The agri-chemical company benefited from the strong growing season as well as a decision to reduce debt via the sale of its South American operations. Now, the company highlighted the growing costs of raw materials as a concern. That's been a real theme in recent weeks. It was enough to worry investors and the group's share price tumbled 8.6% yesterday. In fact, of the top 200, it was the only stock to underperform the Commonwealth Bank.
Fintech Plenty Group said it had achieved record revenue for the 6 months to the end of September, with loan origination soaring. Plenty listed in September last year, and yesterday it said it was the first fintech to achieve a $1 billion loan portfolio. Now, Sean, how about this for a roller coaster? Yesterday, its share price initially jumped 8%, then fell 16% before rising to finish the day down 4%.
That is a roller coaster ride. Crazy. And a couple of other quick updates, Michael. Seven West Media upgraded its earnings guidance on the back of a strong ratings performance for the free-to-air network. It's been a good period for broadcast mediums with advertising strong. And Job Ads Group Seek said its earnings were tracking towards the top end of forecasts. Strong ad volumes in Hong Kong, Singapore, Malaysia and Australia underpinned the improved outlook.
Okay, what's the key overseas news this morning?
Well, the latest outbreak of the Delta variant in New Zealand continues, with the 7-day average now close to 200. Notwithstanding that, the borders of Auckland will reopen from December 1 for fully vaccinated people and those with a negative COVID test result, Prime Minister Jacinda Ardern said yesterday. The wash-up of the meeting between Chinese President Xi Jinping and the US's Joe Biden continues, with news that the two have agreed to hold talks aimed at reducing tensions around nuclear armament, or, in diplomatic speak, strategic stability. The US has a much bigger nuclear arsenal than China, of course, but the Asian powerhouse recently tested a hypersonic weapon. And finally, I spoke last week about Rivian, the electric vehicle maker backed by Amazon and Ford. It listed on Wall Street a week ago, and its share price just keeps rising. In fact, it's more than doubled in 5 days of trading. It's now got a bigger market capitalization than Volkswagen. Another EV company, Lucid, has also been surging, and it's now worth more than Ford. Incredible.
It really is, and especially amazing when you consider that Lucid has just won a Major Car of the Year award in the US. It is the first time that a debut vehicle from a startup has ever won. They've never produced a vehicle before, produced their first vehicle, and it wins Car of the Year. Amazing.
Not bad.
Now, up next is the daily interview, and today, Sean, you're talking to the CEO of Splash, Stephen Phillips.
I can honestly say it's the first time I've spoken to someone and really understood the idea of the metaverse. This was a great interview, particularly if you're interested in where technology is going and how we may eventually live in the virtual world.
Yeah, it's fascinating, that one. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 17th of November, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter and Facebook, and head to fearandgreed.com.au and sign up for our free daily newsletter. I'm Michael Thompson, and that was Fear and Greed. Have a great day.